The cycle gives you a peak of 400,000 in Bitcoin. So we've got one mega cycle that rules it all. It's the most powerful cycle we've ever had. And most people can't see it or don't yet understand it.
Raoul Pal begins by highlighting a crucial aspect of the global economy, the staggering amount of debt, which is 400% of the global GDP. A significant portion of this debt is denominated in US dollars, making it challenging to envisage a crisis solely in US dollars. The aging population, declining productivity, and slowing growth contribute to the increasing debt. This debt often gets monetized, added to the central bank's balance sheet, or diminished through currency debasement. Since the financial crisis of 2008, global liquidity has followed an exponential trend, similar to the growth charts of Bitcoin and the NASDAQ. This period marked a reset of all interest rates to zero, setting the stage for a continuous increase in liquidity.
When the world is 400% of GDP in debt, and half of that is US dollars, it's quite hard to have a US dollar crisis. So anyway, the point being is the aging population, the slowing productivity, the slowing growth, what they lead to is more debt. The debt ends up getting monetized and put on the balance sheet of the central bank or disappearing act by debasement of currency. And over time, lo and behold, liquidity looks like the Bitcoin chart or the NASDAQ chart. It's an exponential trend. It is the key trend since 2008, when all interest rates got reset to zero. Okay, so let's forward look liquidity. Don't expect this to be perfect. This is the first time we've used this kind of thing. But here is, using the RSM cycle, we can forecast the global liquidity cycle. And it suggests that global liquidity peaks in September 2024. And it doesn't go negative until December 2025. Our work tends to suggest that the assets peak when the liquidity cycle goes negative or just around beforehand. But it could peak not with the peak liquidity, but somewhat on its way. But generally speaking, it tells us we've got most of 2025 to be positive, and then things go negative again. Now, you might see the underperformance now and say, well, why is it not working, Raoul? Look at liquidity, it's not following. It's like, this is early days yet. We've got plenty of liquidity to come, whether it's helping China by injecting dollars into the global system for the Chinese currency or for the Japanese, or bailing out the commercial real estate, or giving out stimulus for the election, or whether it's running down the Treasury General account, or whether it's the Chinese printing money or the Europeans cutting rates, or whatever it is, there's lots of liquidity that lies ahead. They've just been a bit slow with the massive injections of liquidity because they needed inflation to get down. Now, we think inflation is dead, at least for the rest of this cycle. So therefore, they should have a green light to really start jamming liquidity. So it's been delayed, let's say, because inflation is not below 3% yet. That's all to come. Okay. By using that, we can forecast how liquidity goes. And guess what? It fits within that lovely log trend, which is perfect. It kind of suggests that this would be right. So global liquidity peaks around then. That's what it's going to look like. And eventually, as liquidity itself starts falling, we will end up, so that's June 2025 now. And as liquidity starts falling by December, then assets should cool off significantly and we go through the winter cycle. Now, please take these. I know people are just going to take them and say, Raoul Pal predicts this. Do not fucking do that, please. It irritates the shit out of me. This is the everything code. I've not shown this to everybody before. Here's the everything code against the NASDAQ. Because if we can forecast liquidity, we can get somewhere close to forecasting prices. So it's suggesting by June 2025, we get to somewhere like 27,000 in the NASDAQ. Does it peak then? Does it peak somewhere between then and December? But we're looking for that kind of directionality. It also maps with those log trends. We get to about 30,000 in NASDAQ. That's kind of the target in my head. Will it be less than that? Will it be more than that? Don't know, don't care, directionally right, before you start having a larger correction. For those of you playing along at home in crypto, here is the same. The cycle gives you a peak of 400,000 in Bitcoin. Again, I have no idea. It could be 50% wrong. I don't really care. The point being is the structural rise in prices lies ahead, and it's going to be reasonably big. Now, again, what are the dates between 2025, June and December? Does crypto peak early? I don't know. I actually don't think so. It would, because we're going to more closely follow the 2013, 2017 cycle, but it's not clear. So I keep an open mind. It's not about nailing the top. It's not about getting the price right. It's about directionally getting this whole trend right. So now I've laid out the everything code and how, by putting all this together, we can actually forecast assets, which is pretty fucking bizarre. We'll see. It's still a hypothesis. It's been working perfectly since we discovered this. Let's see how it plays out over the cycle. But directionally, it's the most important thing you can use. Understanding this stuff.
Raoul Pal connects various cycles, including the debt cycle, US presidential election cycle, and the Bitcoin halving cycle, all converging around 2008. This unified cycle governs significant economic events and trends. Understanding this cycle can provide a clearer picture of market movements and underlying economic forces. Raoul Pal explains how different seasons within the economic cycle affect market performance. During the macro spring, liquidity starts to rise, followed by a more significant increase in the summer. The fall often sees a substantial injection of liquidity, leading to peak earnings and investment cycles, particularly benefiting tech stocks. Winter, on the other hand, is characterized by a reduction in liquidity as central banks attempt to cool down inflation and the overall economy.
And what you've got here in this kind of overly colorful thing is, you've heard me talk about this, macro spring in green. That's when the economy starts thawing because liquidity is starting to rise. Then summer comes and liquidity starts really moving. And then fall is when you really often get a large injection of liquidity before eventually we go into winter, which is the blue, and liquidity shrinks as the central banks pull liquidity out of the market to try and cool inflation and the economy overall. And they've been doing it perfectly. These debt cycles also happen to be the US presidential election cycle, because it so happened that 2008 was the presidential election cycle year. It's also the same as the Bitcoin halving cycle, because Bitcoin was 2008. So we've got one mega cycle that rules it all. It's the most powerful cycle we've ever had. And most people can't see it or don't yet understand it. And it makes them be wrong in their understanding of how everything works. And you can see it, people trying to explain things on Twitter without understanding what really moves things. But when you understand that same grid of colors, the same seasonality, understanding that each of these was an increase or decrease in liquidity, well, when you look at the NASDAQ, and we've proven how NASDAQ is correlated, NASDAQ breaks down exactly by the seasons too. NASDAQ does well in summer, which is we're in now, we're just transitioning into, but it does really well at the end of the cycle in fall. It tends to have a momentum. It's kind of a reflexive process, which really builds on itself, because in fall, earnings are at peak. So equities are driven by earnings plus the investment cycle. People have got more money to invest. So fall, so that would be equate to 2025, should be really strong for tech and strong for this year too, which is summer, coming off green, which tends to be very good with spring too. So this is this exponential age tech trend that I talk about. But crypto, same cycle. This is the crypto cycle. We can call it crypto spring, crypto summer, crypto fall, crypto winter. It's the same as the election cycle. It's the same as all the thing. The presidential cycle. They're all the same. So crypto tends to do decently well in spring. The anomaly was 2020 because of the pandemic. It did very well in spring, less well in fall. Generally speaking, like the NASDAQ, fall is when the real price action starts. My guess is we'll probably be more similar to 2017, 2013, this cycle, because we're not jamming excess liquidity in early, it'll accumulate over time.
The cryptocurrency market also adheres to these cycles. For instance, Bitcoin's performance tends to mirror the broader economic cycles, influenced by the same liquidity and investment trends. Although 2020 was an anomaly due to the pandemic, the general pattern remains consistent. Cryptocurrencies perform well in the spring, with significant price actions in the fall. Raoul Pal's analysis provides a comprehensive framework for understanding the interplay between global debt, liquidity, and asset prices. By recognizing these cycles and their impacts, investors can better navigate the financial markets and make informed decisions. Please like and subscribe my channel.